Time now is 7:14. We are halfway through 2020, and as unpredictable as the first half was, finance experts say now is the time to start planning for the second half. Ernie Burns from Burns Estate Planning and Wealth Advisors is here to keep us on track with the mid-year money moves. Good morning, Ernie. How you doing?
Good morning. Thanks for having me, Rob.
Oh, absolutely. So, all right, we're halfway through the year, a little bit more than halfway. Now is the time. If you haven't been looking, good for you, not looking during March at your finances. But now is the time to start reviewing it again and start preparing for the second half of the year. What should people be looking for when they're looking at their finances this time of year?
Right now, 90% of the people work in the United States, but there's a big 10% lag, and that 10% lag is hindering on a lot of services that we depend on. So a lot of people are not working, and now that $600 check is not coming in. So people trying to get back to work, people trying to get back to school, and they're looking at their finances right now. And obviously, think about it, most divorces are because of stress of finances. So sitting down and really looking at your finances and see what you have to pay, what you have to do to get by is very, very important right now, because we don't know what's going to happen in the future with the stimulus packages. We have some ideas what Senate might pass. So it's really important right now to home in on what is important.
It seems like, even more so, it's important to really be honest with yourself when you are looking at your finances and start to think about what's coming up in that second half of the year. What sort of things should we be looking out for? I know you talked about the stimulus potentially. Is there anything else in the second half of the year that could impact our finances?
Well, yes, obviously politics. Politics can get involved there. If one policy of one side of the direction wants to raise taxes, the other policy of the other side of the election wants to lower taxes, that could be a sway right there. Most people want to keep as much money in their pockets. You can look at the presidential election to be very volatile in this market until that time. In the same instance, we do believe there's going to be a stimulus package of $1,200 per family, and it's going to be the same categories and the same graphics that everybody else has basically seen in the past, the 75 and the 150 for husband and wife. But you can't, that's a one-time payment. What we really need to focus on right now is getting back to work. There's a lot of unemployment out there, but in the same instance, there's a lot of small businesses hiring right now. Maybe not be an ideal job that you want to get back to, but at least you're making an income until maybe that job opens up again that you've had in the past.
If you're looking long term, and we're talking about investments or maybe even your 401k, how important is it to just remain kind of long on that and not get emotional in the short term?
Very good question, Rob. So if you're 20, 30, 40 years old, you're not retiring for 20, 30 years. Now is the time to make sure you're contributing to your retirement account, however it might be labeled, 401k, 403b, IRA, because you're buying shares cheaper. The market has really recovered quite well on expectations that everybody is going to get back to work and the economy is going to get back to normal, and there is a vaccine or two. So therefore, if you're buying shares cheaper, you're adding more share of value at the end of the road when you do retire. Now, if you're currently retired or about to retire, you need to be cautious.
All right. Well, Ernie Burns, thank you so much. We appreciate all of that advice. Really good stuff to kind of hold on to as we move forward into 2020. Thank you so much, sir.
No problem. Thank you for having me.